Hello, how are you, Andrew?
I'm fine. Habib, how are you?
Good, Andrew. How are you? Good to see you.
Good to see you. I see you all in your palatial homes whilst we're in the office. Okay, that's okay.
You see?
You're working so hard.
I'm seeing you. I'm seeing you in your palatial home whilst we're in the office. It's okay.
Great. So shall we all start?
Anu, yes. Hi, Anu.
Hello, Mr. Chimphondah. How are you?
Fine, thank you very much.
Oh, you're all suited up.
Oh, yes. Yeah, we're taking this very seriously.
No work from home for you.
Thank you.
Okay, great. So shall we start it?
Sure.
Very happy to. Anu, would you like to make an initial introduction about GBB Ventures, or do you want us to just kick off?
I think you can start with the introductions of the speakers itself, because like more or less we know the crowd.
Okay. Well, good afternoon, everybody. Very happy to see a nice array of attendees to this webinar, and very happy to be here with my co-panelists. My name is Kecia Rust, and I'm the Executive Director of the Center for Affordable Housing Finance in Africa. We're based in Johannesburg, South Africa, where it is very cold right now. We are also the Secretariat to the African Union for Housing Finance, which is an industry body that represents housing finance practitioners across about, I think, 18, 19 countries at the moment. We've got 50 members. We have with us today, and I will ask you to each introduce yourselves, but just a quick summary introduction. Andrew Chimphondah, who is the CEO and MD of Shelter Afrique, and he will tell you a bit about that. And then Thierno Habib Hann, who's the Senior Housing Finance Specialist, responsible for the IFC's housing finance work in Africa. Both Shelter Afrique and IFC are also AUHF members. And Andrew and Habib are both their main representatives for their respective organizations. Andrew plays the additional role of being the chairman of the African Union for Housing Finance. Andrew and then Habib, would you like to introduce yourselves?
Okay. Well, good morning or good afternoon, everyone, depending on which part of the continent you're in. Thank, of course, Anu and GBB Ventures for having us here. And Kecia, always a pleasure to be with you, and Habib, of course, we're industry colleagues as well. I think in short, we're fortunate as Shelter Afrique also to be the chair of AUHF. So as the chairman of Africa Union for Housing Finance, I would like to urge all those that are not members to advise us so that we can process your membership very, very quickly, because there's a lot of value adds you can get outside of the workshop that we're going to be having today. So Shelter Afrique, you may or may not know, is a Pan-African developmental financial institution owned by 44 countries in Africa. We operate in those countries. We also have ownership from the African Development Bank and Africa Reinsurance Corporation, and we're on a fundraising drive to try to attract Class C shareholders so that they can assist us. Our vision is very clear: decent, affordable homes for all in Africa. Of course, it's a mammoth mission, but we want to do what we can to make a difference. Thanks, Kecia.
Excellent, thank you. And Habib? Habib, you're on mute. We can't hear you.
Thank you very much. Yes, this is the common thread, right? Every single time with these webinars, we never get used to the mute button. You can hear me now?
Yes.
Yes.
Excellent. Thank you very much. I'm glad to be here. Thank you so much for having me. And we at IFC, first of all, would like to share our deepest sympathies for the challenges and hardships faced by families and businesses, particularly small businesses caused by COVID-19 pandemic. We hope that everyone and their families are healthy and safe. and that the effects on your businesses to date have been minimal. On that, my name is Habib Hann. I am a global housing finance specialist at IFC, based in Nairobi, so covering in particular Middle East and Africa as priority regions, but we do have a mandate to develop housing finance globally. So we have priority regions like Southeast Asia, which are also important from a developmental standpoint. For now, I'm actually spending more time working in the region here because we do see a big potential and huge need for investing in the space from an investor perspective, but also as a DFI, developmental financial institution. It's important for us to have some footprints in this sector. So affordable housing is a big priority for IFC, and we are very glad that in many countries, this is also a priority for governments. Like in Kenya, as you all know, you have the Big Four agenda, where actually IFC is a great partner, actually as part of the World Bank Group, to the development of the housing market in the country. So we are very glad that many other countries are also following suit. Rwanda has been doing this, and many other countries across the continent. So very glad to be here and happy to share some insights from our perspectives and hear also from different other participants. Thank you very much.
Excellent. Thank you very much. So the way we're going to do this, we have now, we've got 39 participants who are with us and coming from quite a wide array of organizations and across the continent. And we're very keen for this to be interactive. So we're going to start with about the first 30 minutes or so, or the next 30 minutes, to just with some questions that I have that I'm very keen to hear both Andrea and Habib respond to. And in the course of that, I would like to invite all the other attendees to record your questions in either the Q&A or the chat section. I'll monitor both of those. Very happy for a discussion to arise between attendees, so everyone can carry on and chat alongside the discussion. And then when we get to the last 25 minutes of the webinar, we'll then start to respond to the questions that have been raised in the chat. So that's the approach, I think, broadly that we'll take. Let us get started. And I think best to just start with an overview. I mean, I think, Habib, you raised the point quite clearly. We all have this pandemic on our minds. It's the first thing we're thinking about in everything that we do in our businesses. You and I were each sitting in our homes. Andrew went to work this morning. But we are confronted with the reality of our homes. And I think that I can see probably between the three of us, we're quite comfortable. But we're quite aware that across the continent, the majority of households are living in inadequate housing situations. And that's really something that needs an enormous amount of attention. At the same time, there are huge, as you said, investment opportunities as well. And I think what COVID-19 does for us is it clarifies the mind, and it has been a microscope. It's shown us precisely where interventions are needed. My first question to both of you would be, perhaps if you could just outline your investment strategy for the next year and 5 years. What are you intending as two institutions that are involved in both making investments and also trying to crowd in other investments? What are your strategies? Habib, would you like to start?
Sure, happy to. I hope I have the mute button unmuted, right?
Mm-hmm, we can hear you.
Great, thank you. So this environment is what we call in financial terms a black swan event, right? Where you have 1 out of a million chances of something like this happening. in an economy, right? So it has really surprised everybody, and it's affecting major economies globally, let alone the regions that we're talking about today, right? So first of all, I think from our perspective as IFC, being an international organization, we have actually an important role to play here, because we have to help most of our clients and the different economies where we operate to be resilient, actually, in front of these challenges, right? So the way we do that is really by engaging with all the major stakeholders in the economy. And this is, again, part of our World Bank Group operations, not just IFC, because this is a big undertaking, right? So from an IFC perspective, we have actually put in place some immediate response, right? It's the COVID-19 emergency response that we have put in place to help support the private sector in general, for them to really survive throughout this crisis, right? So that's really our priority today. And, you know, we're doing this through different types of interventions. We're providing trade financing. We're also providing liquidity facilities and working capital solutions, right, for our clients, financial institutions in general, but also on the real sector side, we also have funding to support the real sector, what we call our manufacturing, agri, and services sector and infrastructure, to really help mitigate the crisis. So that's really immediate, and this is something that the IFC board and management has been very supportive of, and they've been very fast in deploying those resources to allow us to support our clients and the countries we work in. So that being said, we're here today to talk about affordable housing. And before the crisis, we had a strategy for affordable housing, and we still have the strategy today, and we're still working, right? You can see, as Kecia mentioned, we are working from home, but that does not mean that we're working less. Actually, if anything, we're working more. Kecia, I'm not sure about you, but you know, it's very busy right now. Not just in the generic financing areas, but also in affordable housing itself, in housing in general, right? So the way we've been looking at the sector is really through three lenses. So one is really in terms of the enabling environment, right? So we just don't want to do or make investments the traditional ways, the way we can scale up and do investments in SME financing through banks and others. Here, we really want to make sure that we can actually scale up, right? Because we're not there yet in terms of housing finance businesses globally, not just for Africa, by the way. So the way we're doing that is bringing along our World Bank colleagues, right, that work with us on the IFC side on the enabling environment to help improve the whole enabling environment, to make sure that we can have more investment going into the sector in the housing space. So that's one angle. And the second one is looking at the supply side. How can we work with the actual private sector, the developers, to really strengthen the capacity and help financing them to build affordable housing? Because traditionally, as you know, developers have been focusing more on the high end and commercial buildings. So we are working with different developers in different countries to see how we can bring them down market so they can serve also the low income segment, like we've seen it and we've done with many clients in India as an example. And for that, we're also working with financial institutions, right, to finance developers, right, in order for them to focus on affordable housing, the segment that we have as priority. So that's the second point in terms of supply. And the third lens would be on the demand side, right? So how are we supporting financial institutions provide funding to the sector, in particular for the offtake, for mortgage financing, as an example. It could be leasing as well, but mainly focusing on mortgage financing. So for that, we have been really pushing many initiatives in many countries now to develop access to long-term funding for the banks, because one of the biggest constraints for banks today is access to long-term funding, and in local currency in particular, because as you know, mortgage financing is a local business. So for that, we have been helping support the development of mortgage refinancing companies. I've been doing this in different regions, different countries. In West Africa, you have CRH, where we're there along with Shelter Afrique as well, in many of these. And in Kenya, we've been all working on KMRC. We've also our World Bank colleagues and Shelter as well. And currently working on the one in Rwanda, trying to push that agenda as well for banks to get access to long-term funding. So that's ongoing. So and we also finance banks directly in terms of access to funding for financing the demand side, the mortgage side of the business, right? So this is basically in a nutshell how we tackle the problem, right? Because it's really a huge problem. It's a huge housing needs, especially in affordable space. And what we call internally our independent evaluation group, which evaluates all of our projects globally, have looked at this sector in particular. And the conclusion was to say, to address the issues in the sector and to be able to make a difference and have impact, we need to look at the sector from all these three angles, basically. So enabling environment, supply side, and demand side. So we need to have an integrated approach in order to affect change in the different countries we work in. So that's our approach today as IFC and World Bank Group, working in tandem across different departments of the institution to make sure we can deliver for the different countries that are in dire need for housing and affordable housing. So perhaps let me stop here and give a chance to Andrew also maybe to come in.
Andrew, yeah, maybe if you could give an overview of your strategy, it'd be interesting also to hear about how your work does or does not intersect with the IFC, because ultimately the integration that Habib is describing internally for the IFC surely needs to happen across the sector as a whole as well. Can I turn it over to you, Andrew?
No, Kecia, thank you very much. Always a pleasure talking to you, Kecia. And I think just to summarize what Habib said, we do everything that IFC does, but with a smaller balance sheet, actually. So I find that when we go in to invest, where we've got IFC next to us, maybe quoting cheaper interest rates that we can, because we have different funding structures. But having said that, I think the key thing from an investment strategy point of view, Kecia, is that we as Shelter Afrique, we have authorized share capital of $1 billion US, issued share capital of half of that, and paid up capital of slightly less than that. So when you look at the challenge of housing affordable, and we estimate, let's say, the shortage of housing across Africa at 56 million units, you're looking at least about $2 trillion that you need to resolve that. So we obviously have too small a balance sheet to do that. So what we do as the DFI is we focus on trying to use the little money that we have to catalyze other institutions so that we can try to make a difference. So our investment strategy is aligned with our business model, where we try to focus on creating successful public-private partnerships. Why? Because of the limited capital, and then secondly is because we can provide a value add that most governments cannot provide. And because of our strong networks across the African continent, we know the housing ministries directly. We also have, networks with also the finance minister. So we're able to put together public-private partnerships to create new primary stock of housing. A case in point, Kecia, would be Rwanda, where we've partnered with the Development Bank of Rwanda to set up a public-private partnership with also the city of Kigali, where they brought in land, they provided subsidies in terms of the infrastructure, and then we've brought in, of course, a developer, a credible developer, and we've brought in our own expertise, and we are setting up, we're delivering 3,000 units in Kigali at a price which is the first in Kigali, in Rwanda, of about $15,000. So that's something that's happening as we speak. I was looking at a video, I think we're probably on 200 houses now. And of course, we're also working towards, replicating that model, which does work, to other countries where we've had governments come in and say, look, we can give you land. We also are prepared to subsidize the infrastructure. So that is the creation of housing stock. Now, that is important, Kecia, we believe, because there's a lot of talk around in the industry around all sorts of fancy models, but we've taken a decisive decision from our board just to talk about implementing things, not talking. So we work on a 3I strategy as we invest across Africa. We look at innovation. Innovation is important because of COVID. We have to accept that certain products do not work anymore. So we've got to go in and say what products work, what improvements are needed, even on the mortgage loan, even on the housing incremental microfinance, but anything, even on an income-linked kind of product. So we're looking at innovation, we're looking at implementation, and hopefully we hope that that will achieve impact. So yes, on the development of stock, we've set up public-private partnerships across different countries within Africa. I've just given an example. And then on the, let's call it the demand side, yes, we invest in mortgage refinance companies. As Habib has mentioned, we are investors in CRRH, that is in Togo. We also were the first to put in money into KMRC in terms of equity, Kenya Mortgage Refinance Company. We also, invested in TMRC, Tanzania Mortgage Refinance Company, and we're watching very closely the work that IFC is doing in Rwanda, because we definitely will participate on the mortgage refinance side to stimulate the commercial lenders or primary mortgage lenders to do more lending across the board. But what is of particular, I think, an issue or challenge for us is that because we're a DFI, we have to always look for products that are not the normal products you find on the market, so that we can make a significant and a notable kind of contribution to the market, i.e. with COVID-19, what becomes important to us, Kecia, is slum upgrading and looking at areas where there's room to focus on investing in slum upgrading. What is also important is because, the World Health Organization can come up and say, you need to exercise social distancing. But we know too well that in some areas like slums, that may not be possible. So we're using COVID-19 as an opportunity to try to work with governments from an advocacy perspective to see how best, more money can be channeled in towards, upgrading slums, looking at the delivery of social housing projects, so that hopefully, we can make a bigger impact. So product-wise, more or less the same as Habib has mentioned. Yes, we provide project finance, we provide lines of credit to banks across those 44 countries that then can also do the construction lending or mortgage lending. We also get into some equity deals where we need to take risks so that we can crowd in private sector money. Trade finance is something we definitely work on as well, and And of course, lastly, as you know, in our Center of Excellence, there's another role we play in terms of working with the likes of yourself in Center for Affordable Housing Foundation, and then other players to provide, research related to housing, basically advocacy role as well, and also capacity building. So it sounds like a mouthful, Kecia, but we want to do what we can in the shortest possible time. Thank you.
Thank you. I mean, you say a mouthful, but actually we do have to cover the breadth of those activities, and they all have to happen at once. The way in which Habib outlined the demand and the supply side in an enabling environment, you need all of those. You need the role of government to participate as well, and that's a difficult party sometimes to engage productively. Kenya and Rwanda are both countries where you've got very strong government interest in affordable housing. Yes. Both countries have named it as a key strategy for their way forward. Kenya has put lots behind it. It's one of the key pillars. I wonder if those might be useful lenses at which to think about some of the investment challenges. And if you could talk a little bit about some of the detail of the projects you're working in, either in Kenya or in Rwanda. I know, Andrew, your project in Rwanda, it's a great project, but it has taken quite some time to get to where it is. And are there lessons that you've learned about things that we might do better as we start to build PPPs further, or things that should have been dealt with differently, problems we could overcome? Let's start with you, Andrew, and then we'll go back to Habib.
Okay. No, thanks, Kecia, for that. Yes, we are heavily involved in Kenya, supporting the Big Four, let's call it the plan of the president, of which affordable housing is one of those Big Four. So I would say, I think one of the lessons learned, Kecia, is that for you to have a successful public-private partnership, it actually starts with the political will of the government of the country. What do I mean by that? I mean that a political will is a recognition of the importance of affordable housing and a creation of, as you say, an enabling environment through policies that support investment into that specific sector. So Rwanda has been a good example because there was a strong political will. I mean, the infrastructure subsidies are real. We see those. The ability to negotiate with the city of Kigali to get land for us to be able to build, those things happened pretty quickly because there was a strong political will, I think right up from the president, Paul Kagame. And then now, once you have that will, it's about working with credible partners. So we spend a lot of time rather assessing the not counterparties, but assessing the strategic partners that we have now. Because we're not in Rwanda, we had to identify the Development Bank of Rwanda as that partner, set up a joint venture, put in some money. They also put in some money. I think it was $3 million a piece. But the idea was when you put in money, it shows commitment. Then together with them and with the land that was provided, we then started to look for a credible developer who then came in on board. And what we were now doing there is, of course, was to say, how can we build houses at an affordable price? Because the thing about our housing is that if you can build a house, a high quality house at a lower cost, you kind of indirectly deal with the affordability issue. So we went in and invested in the building of a factory, which makes what is called aerated autoclave concrete. So instead of a small brick like this that we used to, this is a massive brick. You build a lot faster. You create, a lot of synergies from an economies of scale. So what are the lessons learned? So the lessons learned is that you've got to get the framework right and make sure that the commitments from the parties, they're not only willing to be committed, but they're also able and they're also supported. And I believe, Kecia, when when the other countries see what we've done, and we believe it's a model we can replicate, we can also then go further and apply it elsewhere. So of course that is in Rwanda, which doesn't which of course is a market which doesn't have like the same shortage of housing like if you look at Tanzania, which has a shortage of 3 million. You look at DRC. So that's interesting. And why did we choose Rwanda is because we also looked at the mortgage like penetration, if you look at it as a percentage of the GDP. And I mean, Rwanda's mortgage penetration was sitting at 1.2% against Namibia 20%, Botswana 2.3%, Uganda and such. So yes, that's what we we look at, and I think it's also important. We believe that before we start to look for funding into housing, you need to prove a concept that works. You need to prove that if there's proper governance, you need to prove that you can deliver. And then once we take that model, we replicate it elsewhere, I think it will be a lot easier to attract additional funding for that matter, Kecia. That's for Rwanda. And of course, we are fortunate that we are actually based and housed in Kenya. And similarly, you have, because of the Big Four, a strong political will as well. There's a lot of good innovation that, where the government of Kenya has set up Kenya Mortgage Refinance Company. On top of that, they've also created a website where people, it's called Boma Yangu, which in Kiswahili means my home, where people start to apply for housing, but indirectly you find that, I think it's sitting at about maybe 300,000 odd people, but they're also encouraged to start, creating deposits, and then they start to get vetted by the banks, more like for you to have an, let's call it a qualifying affordability certificate, so that as the houses come on board, they don't have to struggle to look for people to put in those houses, etc. And also the fact that, the government has allocated a specific land for affordable housing, and also a lot of other initiatives in terms of provision of a partial credit guarantee. So the banks on the one hand can give the off-takers finance. At the same time, there's also efforts to support developers on the other side. So there's a strong political will there as well. Kecia, thank you.
Okay, thank you. Habib, how about the work that you've been doing quite a lot of work in Kenya at the moment, supporting the development of the KMRC and other things. Can you talk a little bit about that and your experiences and what it just tells us about the investment environment? And I would really love to hear your thoughts of how things could be improved, or grown, scaled.
Yep, sure. Sorry, I was on mute again, but it's an interesting question, Kecia, and I think it all boils down to what Andrew spoke about earlier, right? The vision and government's willingness, right? So it comes down to that at the end of the day. And I think in Kenya, we had that. I arrived in Kenya in 2016. And since then, we've been really engaging government very closely, actually, to discuss about the importance of affordable housing, talking about the whole value chain. And this is a place to say that you guys have done some wonderful work at CAF, Center for Affordable Housing Finance, on value chain, on the importance of the value chain impact on the GDP and the growth of the different countries. I think it's critical if we can showcase to governments the importance of this sector for developmental purposes and in particular economic development, right? It's not just about a consumer product. It's not just about getting a house or a home, right? It's also about everything that happens before that house gets built. It creates value in the economy. I mean, we've seen this in many markets. I mean, this is how the US got developed, Europe. I mean, more than 50% of the wealth, right, in many of these countries sits in housing, actually. So, people can learn from that. And I think here that's what has started to happen. And we were very glad that government has taken this very seriously. So then we engaged on what are the constraints, what are the things that need to be improved. And again, this comes back to my original point about integrated approach. So we worked very closely with our World Bank colleagues, right, to engage Ministry of Finance, engage Ministry of Housing, Infrastructure, so all the stakeholders, right, to sensitize them about the sector and see what we can do and what can we put on the table and how can we support the sector. And in those conversations, obviously, we shared some best practices globally that has been done, and the liquidity facility in terms of access to long-term financing came out as something that was critical in this market, right? So hence, government was very, very supportive of pushing the KMRC agenda, right? And with our World Bank colleagues, we came up with a very thorough proposal to the government and see how we can actually put it in place to make it also a private sector entity. Because in other countries, other emerging market countries, but that are a bit more advanced, they made the choice that the government will be running institutions like that. But for this to be sustainable, from our perspective, it was important in the Kenyan market and many other markets we work in today in Africa to make these institutions private sector led, still have government support behind from an enabling environment and also from initial setup and funding, right? But it has to be private sector led. Private sector needs to own it. The financial institutions in the country need to own it. So that was, the argument around it, and government was very willing to accept that and support that. So that's how we got involved as IFC as well, to start the conversations and also even talk to some of our financial institutions clients. I can see some of them on the line. Actually, it's very nice to have you. And they all embraced the idea, and everybody just joined efforts and joined this whole KMRC idea. So it was great to see all the FIs. And what was very particular about the Kenya case, because again, when we started to look very deeply into the sector, we saw that you only had about 24,000 or 30,000 mortgages in all of Kenya. So something was not right. We were wondering, okay, in a country of more than 50 million people, how come you only have 24,000 mortgages? I mean, you have more than 24,000 homes, right? So it's impossible. People are building their homes differently. So how are they doing it? So further investigations actually led us to see that mostly it's the SACCOs. The SACCOs are doing this, and people are doing a lot of incremental home construction as well, and that is not being accounted for, right? You have a lot of housing finance that's going on. That is not mortgages through banks. So that's how we thought it was important to include SACCOs, and this has not been traditionally done in other markets with IFC and the World Bank. Usually we only encourage banks, right, to be part of an institution like this. But in Kenya, we saw that there was an opportunity to do something innovative and see how we can bring in all the MFIs, not just banks. So other NBFI, I meant, non-banking financial institutions. So like the SACCOs or microfinance institutions as well, to become shareholders of KMRC and benefit from the funding of KMRC, because these institutions are financing low-income, affordable housing space, but they don't have the capacity to do that. They don't have the financial capacity to do that. So this was a great opportunity for us to include them in the KMRC conceptualization. And we were very glad that our major banks, partners, and government also were supportive, and everybody agreed to be around the table and set up KMRC, so which is about to start operating, hopefully very soon. The COVID, I think, slowing things a bit, but KMRC, we think, has been set up ready to international standards, and we are very glad that there has been a lot of support from all the sectors in the country. So we think that KMRC will solve one part of the issue, right, in terms of access to long-term funding, but we still need to work very hard. And I think I'm very glad that Andrew insisted on this, right, on the supply side, because KMRC can have all the money it has today, because World Bank has provided seed funding some good amount of money, and AFDB as well has put some money, and the banks are shareholders. It's going to be important, right, to have houses out there that can be mortgaged, right? Because you can have all the money within KMRC, which role, by the way, is to provide long-term funding to the banks and take collateral, which is composed of mortgages that those banks have given out to households, right? So if banks haven't provided enough mortgages, then you won't have enough. You won't have a good portfolio for KMRC to refinance, because KMRC is only supposed to refinance those mortgages that have been given out already, right? So we need to really help strengthen the mortgage financing business, but also the supply side, because houses need to exist for them to be mortgaged to start. So Andrew, I'm very glad that this is something that your institution is pushing, and on our side also we're doing what we can on the supply side, and very happy to do any sort of collaboration and cooperation on that end. So we'll be also supporting the SACCOs and working with our partner banks to see how SACCOs capacity can be strengthened from a governance standpoint, investability standpoint, so they can tap into KMRC as well and also be more bankable, right, for the financial institutions in the country. So these are some of the things that we are doing in Kenya. I'm happy to talk about Rwanda as well, but you're the boss.
Well, let me come in with a question that in fact was sent to GBB Venture before the webinar started. Someone wanted to know, and I think it fits into what you're talking about right now. We know that across the continent that the majority of housing is actually being built by households themselves, and either incrementally and that would be low-income households, but also middle-income households, in fact, quite a wide range. It gets called, it gets classified as the so-called informal sector. And so the question that was coming is, how can investors support that latent capacity if that's not being recognized as the formal housing delivery capacity? How can investors support the latent capacity of the so-called informal sector of households building their housing themselves? And I think you went some way with that around the SACCOs and the role that SACCOs play in the financing. Maybe Andrew, would you want to start with that, with a response to that question? You're on mute.
Okay, Kecia, thank you very much. I thought the mute problem was only a Habib problem, but thank you for that. Yeah, I think the informal sector, of course, the challenge, if I put my banking cap on, has always been around the inability to show, I suppose, income, in the same way that someone who's employed can show income, which is the basis that most institutions will provide lending. But I do think that there's opportunities, and we've got a partnership with Habib International to actually, and we've started the process of trying to develop specific products targeted at specifically that sector. So let me put it in perspective. So for investors to be able to invest in the informal sector and provide them with the funding to assist them in the building of the housing, the mortgage product would not apply in that area. You'd want some sort of a microloan or an incremental building loan that matches the cash flows of the specific beneficiary. And the only way we believe that you can work on that is by identifying retail intermediaries that understand that market, and then giving those intermediaries financing. Now, what I mean by that is identifying like credible, housing microfinanciers that we can now invest in, making sure that, of course, they are well governed, and then they can then go in and provide the funding required to support those individuals that may have access to land but now need additional financing to be able to put up, their homes. Of course, innovation is to come in terms of how do they treat issues like titling, and usually those entities have a better understanding. Maybe you use permission to occupy, maybe you use different type of assurances that help, they manage their risk, of course, with an understanding of the market, because each country is different, each market is different. But I do believe that that latent capacity can be capitalized. I find even in Kenya, where I live, that there is huge potential in that market. There's a huge informal market here. It's called the Jua Kali market in Swahili terms, etc., where there's big potential for retail intermediaries, and even the banks that come up with innovative, even insurance products, tend to profit from that. So yes, I think that question is very, very critical, and it's something which I do believe that there is a way to be able to support that market, but it's about partnering with retail financial intermediaries that are closer to those beneficiaries than trying to do something without an understanding of the market behavior in country. Kecia, that's what I would say. Of course, with the SACCOs, we find ourselves that is, I think, an innovation which is very attractive, particularly for banks and other lenders, because in that SACCO or the savings and credit cooperative organizations, you already have a catchment area of potential clients that will obviously need housing. The fact that they're saving money, it also somewhat reduces the risk, and it's a question of how we integrate and how we work with SACCOs to be able to assist their members in terms of attracting capital and also providing housing for the same members. Thank you, Kecia.
I mean, it seems to me that if we're talking about the majority of the population that doesn't align with the majority of the financing systems, yes, then the financing systems themselves need to adjust and change. And there have been some interesting models. I think it's NMRC that developed guidelines for underwriting for informal incomes. Mm-hmm. And I'm sure that's something that KMRC will do as well, so that that notion of informal starts to be challenged a bit, where you can find ways to demonstrate the kinds of things that lenders need to trust that the risk is manageable, but still accommodate the very diverse capacities of this of the population.
Yeah, Kecia, if I come in on the same subject. Look, for us to scale up access to housing, especially low-cost affordable housing, this is an area we cannot ignore, and actually we need to embrace and support. Self-construction, informal sector, informal income. Actually, I would like to even rephrase that, right? It's not, we don't necessarily want to call this sector informal. It's more self-employed. I call it self-employed, right? It's a better name for me than just informal. And we've seen this. We do a lot of work. We've done a lot of work in Asia, in India, for instance, right? Not later than last May, we've done a couple of very interesting investments in India, right? South Asia. And, some of those guys that we've been financing for many years now are focusing on this particular sector, right? So these entities are called HFCs, the housing finance companies. So they are non-banking financial institutions, the NBFIs, right? And you look at their books, the portfolio consists of 60 to 80% of this kind of people, right? The Jokali that you've been talking about, Andrew. You know, it's the little farmer, the little entrepreneur. Like, you know, they consider it informal, but actually they have an employment. I mean, they're self-employed, right? So in India, they call them self-employed. They don't call them informal. So you look at the books, we talk about salary, they talk about self-employed. And that self-employed group represents 60 to 80%. And these are not like the kind of doctors, self-employed or engineers. No, these are, you know, the guy selling his coffee at the corner of the street, the lady selling her fruits in the big market in the rural area or in the peri-urban area. So these are kind of people that these people are financing. And we went to visit some of the houses they built, and they built them incrementally. And these housing finance companies, which are, some of them are our clients, IFC, they're financing these people, right? So we went to look at the houses, and very nicely built to standards, by the way, because that's the other thing, you know, having financial institutions like these HFCs in India look at the space has helped improve the quality of those houses built by those so-called informal sector people. Because if they do their own self-construction without the support and controls of an institution like these banks, these HFCs, these housing finance companies, then, you know, you have issues with the quality of the house, and you know, they can be prone to anything, right? So that's why I think it's critical to focus on this sector. And I think SACCOs are one way to do that here. And you do have also other MFIs or you know, institutions that are interested in the space. And even banks should look at this space very seriously, because this is how people build their homes in Africa, right? It's 70, 80%, probably even more. People build their own homes. It's not through mortgage. I mean, we've seen it. In Kenya, you have 24,000 or maybe 30,000 mortgages. So meaning that people are building, you know, other ways. And one of the biggest one is the self-construction. So we need to find ways to finance that. And India, they have found that way through the HFCs that I just described. When we were intervening there, maybe 10, 12 years ago, one of the first HFC that we helped set up and finance, right? Which today has grown to even be listed in the stock market in India. And they mostly, as I said, financing these informal or self-employed people, right? They've been invested by some of the biggest private equity funds from the US, because people have seen the potential with the numbers, etc. 12 years later, today, you have more than 100 of that kind of HFC in India, right?
Wow.
Thanks to that example that we've done maybe 12 years ago. Today, you have more than 100. And last time I was in India, when we were doing this transaction, we met the National Housing Bank of India, which is basically the mortgage refinancing company for India. And that's the one I was talking about, which is publicly owned, but they do refinancing like KMRC is going to do, right? Or TMRC is doing. So we met them, and one of the questions, because they regulate and finance those HFCs. And actually there's been some restructuring where they don't regulate anymore, but they just finance, they provide a long-term funding to those HFCs, right? For them to get access to long-term funding and finance the sector with those informal sector people, etc. So we asked them, 100, isn't that a lot? So the chairman or CEO of the institution basically looked at us and said, if I have another 10 today, I would sign them up. Okay. So just to tell you, they see that's the future for them. And that's why people have been able to resolve, or they're resolving the issues of access to housing. So just to give you that example and to say that it is profitable as well, you can make money in it. And that client that I'm talking about specifically is one of the most advanced today. They leverage technology big time, right? And that helped them save on cost. And also even NPLs. The NPL levels, by the way, is less than 1%, was 0.3% last time I looked. So just to tell you, and they're just financing these kind of people that we're just talking about here. So I think it's about showcasing the model and showing that it works. And this is one of the things that we're embarking on. And we had taken actually three of the mortgage refinancing companies in Africa, CRH from West Africa, KMRC, Kenya here, and Tanzania, TMRC. We've taken all three early this year to India to see some of those examples, to see our clients there, how they've been successful and how this thing is working. And we also took them to the mortgage refinancing company for India, which is NFP, and they've seen the model, and they're really looking forward also to see how we can support them to implement the same on the continent. So this is, something that we've taken seriously, and it's part of our strategy. I should have mentioned it earlier, but it is core part of our strategy. Thank you.
That's great. I mean, I think that's something that we could talk for hours on this issue. We only have 4 minutes left. That's gone very quickly. So I'm going to quickly summarize the few questions that have been here and then give you each a chance to conclude and maybe touch on those. There was a question about the need for land and infrastructure, obviously, but that a critical thing is about the financing of the infrastructure to enable access to well-located land. And how does one address that? And is that something that you can bring investors into? Another question about bringing technology from overseas into the markets here, and how are different countries working with that importing of non-African technologies. Then a specific question on what initiatives are being considered for slum upgrading given COVID-19. And this person was interested especially in South Africa. And then someone else talking about the broader sustainability of a human settlement, which isn't just about the residential component, but also about the socioeconomic services, schools, medical facilities, and the commercial things. And I'm assuming the question there is, how do we bring in all of the multiplicity of investors that you need to cover that breadth of development in the built environment? Far too many questions for 3 minutes left, but Andrew, you want to take a stab at 90 seconds?
Okay, all right, thank you, Kecia. I see, Kecia, we've got one member wanting to join the African Union of Housing Finance. I think that's Richard Eshun for Ghana. I assume your secretariat has picked up on him. And I must say, before answering those questions, that we want more people to join the African Union for Housing Finance. Kecia, heading up the secretariat through the Center for Affordable Housing Finance, I think can capture those. So Kecia, we're in desperate need for numbers and advocates and housing. When it comes to using technology from outside, I do believe that that's a very good, contribution from the participant. When we talk of aerated autoclave concrete that we're using in Rwanda, you find that overseas that's been used many times, but it's now new maybe within Africa. You find if you go to Nigeria, they've got EcoStone, which is making some waves in the market, but they're using cellular lightweight concrete, maybe new coming into the market, but it has already been technology that's existed, outside of Africa. And then if you go to Ivory Coast, there's a developer there called PME Construction using steel frames and can build a lot faster than using the normal brick and mortar. So yes, technology from outside coming in, there's still scope for using that more. And yes, financing infrastructure, especially that which goes to housing development, we call that last mile infrastructure funding. We have a product that funds that within the Shelter Africa perspective, but it's something which we can always continue to work with. So I hope I've maybe covered what I could, Kecia, but otherwise we are more than happy to respond formally to specifics, in a written format from the Shelter Africa side. Kecia, thank you very much.
Thank you very much. Habib, how about you? How would you like to respond?
I just want to maybe talk about in terms of the social amenities and how to build just beyond houses, right? Because it's about, local development. It's about urbanization. It's not just houses, because we've seen examples where people would build houses and with nothing around it and too far from everything, and they don't sell. And that hasn't been very encouraging for a lot of developers. I mean, we've seen this in Angola and different other places. So even in Latin America, we've seen this. So I think it's important to think about it holistically and make sure that we can have a developmental approach which integrates the social amenities, right? I mean, everything that's needed for the community. I mean, this is exactly what we've been discussing in Rwanda, for instance. So beyond just having a project of 10,000 houses or units, the question was, how do we develop commercial space in there? How do we have schools, medical centers, and also bring a green aspect to it? And this is something big and important for IFC climate, right? Green buildings, and greeneries around the whole development. So that we're also doing in collaboration with other DFIs. So that's very critical to think about that. And one of the reasons why it's also important is from an economical standpoint, right? As an investor, it's important to diversify your source of income on a project, right? So if you want to do affordable housing, a lot of people believe and think that affordable housing is not profitable, but which is not true, first of all. But one way to even make it more profitable is put it in an integrated way, right? With a development that has a mixed income and mixed use as well, right? So mixed income, having affordable, middle income and high income in the same development, so that the high income and middle income houses can cross-subsidize the lower income side of the development. And then even the commercial houses, also commercial businesses or real estate that will be developed, can also cross-subsidize the lower income side. So then all in all, as an integrated project, it makes economic sense for the investor and for the developer. So that's why I think that part in terms of social amenities and everything else around the houses is also important. Thank you very much. This has been extremely useful, and I just want to thank all the participants as well, and very happy to follow up offline if anybody who's interested to partner or do more in the space.
Brilliant. Thank you so much. And thank you to both of you, Habib and Andrew. Thank you for your contributions and for a really rich discussion. We could have gone on for a while, I think. And we do in other forums and platforms as well. Thank you to all of our participants who've engaged and who have listened. All of us, we have on our websites much more information that you can draw down from. We're all, I think, each of us very happy to receive emails from you if you have particular questions, and we look forward to carrying on the conversation further into the future. Good.
Great. Thank you all, panelists. Andrew, sorry, I cut you off. Yeah.
No, it's fine. So I was just going to say thank you, GBB Ventures, for giving us this opportunity and platform. Kecia, I love your passion. I know we can do more as Shelter Afrique with the Center for Affordable Housing Finance. I'll make sure we do more together collectively. And Habib, always a pleasure to have you on this forum, and all the respected members that of course are passionate about affordable housing. I do think that there's a lot of opportunity. And Kecia, we've got another organization from the UK that wants to be a member of the AUHF. Fantastic. But thank you, Anna, and the GBB for this opportunity.
Great. Thanks a lot to all the panel members and all the participants. It really was a very insightful session, and I'm sure the questions are just constantly pouring in. We will be taking more of these questions in future, more of these sessions in future, and I request all of you to keep following GBB Venture for more of AHIS webinar series. Thank you all once again. Have a great day ahead. Bye-bye.
Thank you. All the best. Thank you so much.